Alright guys, so tap in, you already see the video title, but check it. Over this week just gone, over at our Discord, we've made $10,000 in profit. We entered into 5 different option plays, we won on every single one of them. Check it out. Made $2,500 on Qualcomm, made $2,000 on Nvidia, made another $2,000 on Fubo, and so on and so forth. You guys can go ahead, screenshot it, look at it, do whatever you need to do. So we've made no losses. Yes, you've heard that right. But is that to say I've never made any losses? Of course not, guys. Billionaire hedge fund managers make losses every single year on some of their plays. But it's all about what you do with those losses, what you learn. That's how you grow, advance, and make even more money down the line. So I can tell you guys, we're on a winning streak of like 7 different option plays over at the Discord. The last option we lost on was a couple of $100 on a CrowdStrike call at the very beginning of the year. But what's a couple of $100 when you made $15,000 since the beginning of the year? Now, there's 2 reasons why I've been able to make that type of money, and I want to share it with you guys, because the first is, throughout my life, guys, I've been a sponge for information. So when I've heard someone's made $100, $500, $1,000, I'm tuning in to see how have they done it, and if I can go ahead and replicate that and make that myself. So you best believe when I'm hearing someone like Gary Vee's making millions doing what he's doing, I'm tapping in to see if I can get in on the action, okay? So when the smart ones amongst you guys, when I say that I've made that $10,000, you guys want to be tuning in to see, all right, how has this guy done it? Now, over the decade that I've been in the markets, I've been developing my strategies, studying the markets, and come up with my system that's allowed me to make winning trades like the 5 that we've entered into and closed out profitably this week. So that's why I've set up the Discord, so I can post it there and the guys can get in on the action. So if you guys want to join us on those, get into those type of moves, link is in the description below, and we'll see you guys over there. Now guys, the second reason I've been able to make that type of money is because since the decade that I've been in the markets, I've made a hell of a lot of mistakes, you best believe, all right? So what I wanna do is share with you guys some of the biggest mistakes I've made, particularly towards the beginning of my investing and trading time, particularly between the first 0 to 5 years. Go through those, and hopefully that will help you guys fast track your progress, your development, and help you guys make a lot of money in the markets and save a lot of money in doing so as well. But we're gonna kick things off, guys, with the first one, and that is forcing a setup. Guys, beginners, intermediates, more advanced investors and traders are criminal for this. Forcing a setup is basically getting in too early or too late into a play. Now, whether this is driven by emotions, FOMO, or just whether it's driven by the fact that you don't know where the optimal point to get in at, this is costly. And believe me guys, in the first 5 years of my investing and trading, I always used to do this, always used to force a setup. Getting too early, it would cost me money. Now, especially if you are trading options, because every day your option loses value. This is option decay. It's measured by theta, shows you guys the rate of decay. So if you get into a move and it moves against you, you're gonna be penalized, okay? And as I say, I was getting smoked in the first 0 to 5 years. But once I understood there is an optimal setup, it allowed me to make a lot of money. But let me share this with you guys, because I told you Qualcomm, we made $2,500 in Qualcomm this week, all right? We entered into on Monday, closed out on Tuesday, 24 hours, made $2,500. Now, let me show you guys exactly what I mean by forcing a setup, okay? So check it out with me, because Qualcomm was on my radar for a number of days before I even entered into the trade. So when I saw Qualcomm somewhere around this type of level right here, all right, I'm seeing the play dipping down. I know that optimum level is going to be somewhere around here, because this is that support line and I'm expecting a bounce off support. But the play's nowhere near support, so I'm not going to force it. I'm not going to get in just yet. So the very next day, guys, I see Qualcomm move down again. Big red day. I'm still holding off. You guys already know. Told you. Optimum entry for me is down here. I want to wait for it to get to that type of level. All right. If we continue, boom. Qualcomm hit that support line, and that's where I want to get in at. And that's exactly what we did. All right. We got in right here. And I was expecting a bounce, a push to the upside in that type of direction. And that's exactly what we got, guys. So the very next day, big green candle, so on and so forth, okay? So good setup, good move, and that's how we made that $2,500 on Qualcomm, just not by forcing the setup, guys, by waiting for the optimum entry, and it played out exactly for us. So often in these markets, you want to wait for the play to fall into the palm of your hands, and that's how you're going to make a lot of money and save yourself money in doing so. Guys, the second big mistake I used to make, guys, in the first 0 to 5 years is not understanding the charts. So when I say understanding the charts, I'm talking about all the technicals, whether that's chart patterns, breakouts, whether that's technical indicators, your RSI, your moving averages, your candlesticks as well. The charts are always telling you things. They tell you a hell of a lot of information, right? Put that all together, you can make a lot of money. So when I first started out, first couple of years, first 5 years, guys, I wasn't really paying attention to the charts. So what this would do would cost me a lot of money, and I'd miss opportunities, and also I'd get into opportunities that weren't good setups. And if I knew what the technicals were saying, if I knew what the charts were saying, I would have managed to avoid that. But check this out with me, all right? I'm gonna show you this on Qualcomm, okay? Hone in on this candle right here with me, this candle, and this candle. You guys can see they're all very similar candles, right? To be specific, this is a hammer candle, this is a hammer candle, and this is a dragonfly doji. Weird name, but whatever, right? These show, these are bullish candles that show that that stock is on a potential reversal course to the upside. So look at the move after this candle, look at the move after this candle. Very same candle, just approach, guys. Very likely we're going to see a push to the upside. That's exactly what we got, right? Push to the upside. That's what I was expecting. So when you get those types of candles, right? The hammer candles, the dragonfly doji candles at levels of support, I can tell you guys, look, we are potentially going to see a push to the upside, and that's exactly what played out. Okay, so understanding the charts has allowed me to make a lot of money in the process, and the team over at the Discord as well. Okay, now guys, the next mistake that I was notorious at making was just being greedy, guys, just being greedy. And we're all humans, we're all born with a bit of greed inside us, some much more than others, okay? But if this plays out in the markets for you, if you let this greed to control what you're doing, you can end up losing money. You can end up losing money. So for example, you're in Qualcomm, right? You're seeing Qualcomm is moving strong, okay? Even the next day, the very next day, we saw Qualcomm actually hit this type of level, somewhere around like the 190. Bear in mind, got in at like the 170 level, right? It's 190 now. You see Qualcomm moving at 190, you're making bank, you're thousands up. You're thinking, man, this is good. It's gonna continue moving. I expect this thing to move to $200 plus. It's gonna keep climbing, it's gonna keep climbing. No, guys, look at that candle. This goes back to what I was just saying about understanding candlesticks. That candle I've just circled now is, you guys can see, pretty much the reverse of this candle right here. I told you this candle right here, that's your hammer candle. That is your bullish candle. So given that this is the reverse, this is your inverted hammer candle, telling you guys that we might see a reverse course of action for this stock. So that is the time to get out the play, bank the profit, and move to the next winning opportunity, okay? Now, let's just check what happened the very next day after we've seen this inverted hammer candle, okay? After we've seen this inverted hammer candle, let's just check what happened the very next day with Qualcomm, okay? Boom, big red candle, guys. You guys can see that, big red candle after that inverted hammer candle. Now, if you were in that play, you would now be down hundreds of dollars, thousands of dollars, or it would have taken off hundreds of dollars or thousands of dollars off your profits, and you would have gone ahead and panic sold at that level. But had you known that the day before was that inverted hammer candles telling you guys you're going to see a potential reversal of course to the downside, you would have sold out for maximum profits, okay? So having an exit strategy, controlling your greed, super important. Now guys, the next one I've got for you is, and I used to make this mistake, not cutting losses, right? Not cutting losses early and not having an exit plan if things don't go your way, okay? Super important. So what I would do, back in my first 5 years of investing and trading, you're holding on in hope, guys. You're holding on in hope. Having an exit plan is super important, right? It's gonna help you guys save money, and you're gonna essentially have a good amount of money to then move to the next winning trade or play, rather than your money just diminishing before your eyes, okay? So taking Qualcomm as an example, let's say, for example, we'd entered the trade on this day, but the very next day we saw Qualcomm below the support line right here, okay? Qualcomm ended up right here. Okay, well, guys, if we see Qualcomm right there, that's not a good sign. It's broken the technicals, it's below that support line, it's not where we want it to be. So, good idea for us to exit the trade, exit the play, and then move on. Lose a couple of $100 there, take that to the next winning opportunity, okay? But equally so, being aware of the technicals and etc. If we saw Qualcomm there, even though it dipped, right? It dipped down, that's still okay, because we might get a bounce on that type of level, okay? So cutting losses is important, and it ties into knowing where the optimal point is to get into the play. The first point I gave you guys ties into the second point of understanding the charts as well. I'm gonna give you guys a bonus one, and that is not analyzing your losing trades. Super important, guys. Most people don't do this. Most people just lock in that realized loss and then move on. They don't ever look at it. And I understand it might be difficult to look at a losing trade or losing investment, whatever, where you've lost money, but that can give you a lot of tools to future success. Now, we made like $1,600 on LAC puts, and we made like $1,000 on Facebook puts a couple of days before that, okay? $1,000 on Facebook puts a couple of days before that. I'll tell you guys this. In the first couple of years, there was a mistake I kept making, and I would jump into call options when I saw a certain type of setup. Lo and behold, guys, that was a put option opportunity. I'd realized that after a couple of losses, but now that is one of my put option strategies, right? So that's the same strategy. I then went ahead and used and made over $1,000 on LAC, the $1,000 on the Facebook Meta puts as well, just by analyzing one of my previous losses. So keep tabs of your losses, understand why there were losses, and then see if there's an opportunity for you then to do the opposite action of what you did the first time round and make money in the future.